Hello again. So we are going to talk about the tech sell-off that we saw earlier this week. That was a pretty massive sell-off, to be honest. So let's get into it. So I have my trusty clipboard. So let's talk about what we are seeing in the markets with the tech sell-off. So if you guys remember my previous videos, I've talked about this, about investor behavior. Okay, so we talked about individual investment behavior, and then we also talked about institutional investment behavior. I can talk tonight. It's Friday, forgive me. All right, so when the market's having its up and down movements, okay, the institutional investors are very much watching the fundamentals and the technical signals and indicators for the markets. And when the markets are at a lower point, they don't get exactly right all the time. They don't get it right at the lowest point. But when the markets are lower, that's when the institutional investors buy in. Okay. And then as the market prices are being pushed up, again, they don't get it exactly right on the spot, but pretty close. Okay. They are going to sell out. So they are going to do what's called profit taking, because here they made a nice profit from buying low and then selling high. That's the whole name of the game of investing, right? Is to make money. So that's how they are making their money when they are trading in their accounts, by buying low and then selling high. Now, the tech sector has hit some big highs recently. Now, not all of the FANG stocks hit record highs with this go around, but they have hit record highs more recently. So if you remember FANG, F-A-A-N-G, stands for Facebook, Apple, Amazon, Netflix, and Google. So those are the big heavy hitters of the tech sector that are closely watched by institutional investors and analysts. So a lot of those hit some big highs recently. And so this is why the institutional investors have sold out in mass droves, which then, of course, leads to individual investors following their lead and selling out as well. So some of these stocks are continuing to be sold out. Some of them are already being bought back in. And so it all varies a little bit, but that's what we're seeing in the market. So that's what's happened as of late and why we saw this big, massive market movement. It was all driven by the tech sector being sold out. And that's why they were being sold out, because, again, they're just profit taking, which makes sense. I mean, that's what you're supposed to do. So, but as far as the tech sector, a lot of people are like, well, is it going away? Absolutely not. Our dependency on technology has just grown with this virus situation in order for us to communicate with one another. So they're not going anywhere. But you know, their stocks are going to have these type of movements. Now, they will continue to grow, but they're not immune to sell-off like we've just seen. Other than that, I mean, there's not really a ton of news. There is some speculation that there will be another round of shutdowns later on in the year. We'll see how that goes. I think that's going to be greatly dependent on the elections. So we'll see how that plays out. And we are just starting to get into the full swing of election season. It is so far, I mean, nothing dramatic and pretty tame. Both candidates are just going around making the rounds. But we'll see as it progresses, you know, if there's any more drama that comes about. Other than that, again, the markets are just kind of chugging along. The recovery is, you know, it's actually looking better than we had anticipated. The beige book from the Federal Reserve shows the economy's, again, doing well. And the jobs, you know, we lost quite a bit, but again, they are coming back in good numbers. So that's always a good benefit. And other than that, I mean, it's all kind of quiet on the economic front. So until next time, that'll be it for today's video. If you guys have any questions, put them in the comment section below. And as always, hit the subscribe button, and I will talk with you later.